Hi guys, it's Mosh. Welcome back to another one. If you're new here, click on that subscribe button. If you want to see my daily trades, my profits, my losses, any updates, check out my Instagram and Twitter page. I'll link it in the description below. In today's video, I'll talk about the two main types of car finance in the UK, and I'll go through my car history and the car I recently bought with my trading profits. I'll also give you an insight into how to get the best car finance deals and certain tricks that salespeople use in car showrooms and how to avoid them, and also how to make money off cars. I want to start off by giving my personal car buying advice. Firstly, buy nearly new cars or used cars. Do not ever go for brand new cars. Completely brand new cars are the worst investments ever. This is obviously excluding supercars and hypercars. The reason I say this, as soon as you drive out of the showroom, that car has lost 10% of its value, it's depreciated by 10%. Imagine that, as soon as you drive it out. Now, when you buy nearly new cars, and what I mean by nearly new is a couple of years old and very low mileage, a lot of that depreciation has already taken place. Another advice is look for a car with full service history. And generally when I go to buy cars, I try and ensure that it's from a main dealer. The reason why I go for that is because if it's serviced by the main dealer, it's always been looked after to manufacturer specs. And I would generally pay a little bit more to ensure I have full dealer service history. I also look for cars that have no more than 2 previous owners, because the more previous owners that car has, you don't know how it's driven, what type of person had it before, and generally you find a lot of issues with cars that have changed hands so many times. Okay, there are 2 types of car finance deals in the UK. The first is called PCP. PCP means personal contract purchase, and it's the most common type of finance in the UK. So this is how it works. Let's say you've seen a car and the value of the car is £20,000. Generally, you have to pay an initial deposit. Let's say that initial deposit is £2,000. Then you have to pick a term. Generally, the term is 3 to 5 years. Okay, so let's say we pick 3 years, which is 36 months. Now in a PCP, they give you something called an optional final payment. Generally, the dealer gives you that value, which is a guaranteed asset value of the car in 3 years' time. So let's say for our car, it's £10,000. Because this is finance, there is going to be interest. Let's say the interest is 5% per year. That means on the £18,000 borrowed, because you paid a £2,000 deposit, our monthly payment comes to £287 with a total repayable amount around £20,000. Now, PCP is useful for people that only want a car a couple of years, no more than 5 years, and they want to change and get something new. Now, the next thing I'll talk about traps to avoid and useful tips on PCP plans. Whatever the value of the car, so in our example is £20,000, always negotiate that down, because that has already been inflated. If they bought it off someone else, they bought it for book value. So you always have some leeway to negotiate that price. At £20,000, you could easily knock off £1,000 or 2 from that. I've actually bought cars without paying any deposit, because let's say the value of the car is £20,000. I've managed to knock off £1,000 from the dealer. The dealer has actually put that £1,000 as a deposit. Never pay more than 5% interest. What dealers will do, they will always quote you with a maximum interest rate. Always reject that, because that's BS. Even at 5%, they're still making money. So if they quote you 7%, 12%, just tell them no, because at the end of the day, they want to make a sale. And even if they give you 3% interest, even 1% interest, they're still making money off the car. One thing they never tell you is you can actually return the car in any part of your term. So if you've got a 3-year term, you can actually return it in 6 months' time, 1 year time. You can actually get another car without completing your term. So let's say you've got a 3-year term, after a year and a half you want to get a new car. There's something called positive equity. If your car's value at that current time is higher than the finance outstanding, you're in positive equity. You actually are owed money from the dealership. So you can use that money owed as a deposit on a new car. If you're in negative equity, so the finance outstanding is actually higher than the car's value, then you can actually get another car and negotiate the dealer to pay that negative equity off and get a new car. Now, let's say you've kept the car for the 3-year term, you can just return it back. Now, you've got two options at the end of your term. So let's say your term is 3 years, 36 months, you get to the end, you can pay the optional final payment, which in our example is £10,000, or you can choose to return the car and get a new car, or get no cars at all. The next popular form of car finance is called HP, hire purchase. The name is a bit misleading. So this is how it works. Let's say the car value is £20,000, your initial deposit is £2,000, your fixed term, let's say again, is 3 years, 36 months. This time around, there is no optional final payment. That means your monthly payment is going to be higher and it comes to £538, and your total repairable amount is around £19,300. This option is good for anyone that knows they're going to keep the car for more than 5 years. Again, you can do exactly the same things with the PCP. You can swap it at any time, even if you're in positive or negative equity. I'm going to talk through my cars that I've had in the past. I passed my driving at 17 years old. My first car was a Citroen Saxo. It was a proper rude boy car, as you can tell by the picture. The car was an absolute nightmare. I used to have so many problems. I used to have a problem every month, so I got rid of it and I bought, probably to date, my favorite car is a BMW E36, the 3 Series. I got it at 18. Now this is where you can make money off cars. Currently that car is appreciating in value. I sold it for a really low amount. If I held on to it, I could have made a profit, about £2,000-3,000 profit on that car. And I think in the future, classic cars like the E36, E30, and other brands as well, they'll go up in value, especially when all the cars become electric. Because they're not making petrol, diesel cars anymore, these cars will retain and appreciate in value. I had that for a few years, then I had the BMW E65 series. Again, I really like the look of the car and I think this is going to be a future classic, so I'm trying to get hold of one. After that, I went for the Range Rover Evoque, and I had that for 18 months. Now, it's a decent car, especially off-roading, in the snow, in bad weather, but I miss the drive of BMWs. BMWs give you the best drive out of Mercs, Audis, and Volkswagens. Now, the car I recently bought with my trading profits is the BMW F30 3 Series X-Drive version. I absolutely love the car, especially now that it's a 4-wheel drive, so it's good in really wet weather and especially the snow as well. People that own rear-wheel drive cars know in the snow they're absolutely useless. If you want a free share to start your trading journey, all you have to do is create a Trading 212 account. Use a link in the description below. Create a Trading 212 account and you get a completely free share worth up to £100. So definitely go do that. I hope this video was useful to you. Please go like and subscribe as it helps beat the YouTube algorithm.